Hello, this is George Ignastu, Treasurer of Strongsville City Schools. Welcome back to episode 2 of Financial Fast Facts with the Treasurer. In this episode, we will cover the 5-year forecast that was presented at the November 20th Board of Education meeting and filed to the Ohio Department of Education and Workforce as part of the required November filing. As a school district, we are required to present, adopt, and file the 5-year forecast of our district's general operating fund semi-annually in November and May. As a reminder, our fiscal year is July 1st to June 30th. The purpose and objectives of the 5-year forecast is to 1. Engage our Board of Education and the community in the long-range planning and discussion of the financial issues facing the school district. 2. To serve as a basis for determining our district's ability to sign a 412 certificate when entering in multi-year contracts to certify the funds are available to meet the contractual obligations. And 3, to provide a method for the Department of Education and the Auditor of State's Office to identify school districts with potential financial problems. The information on the 5-year forecast shows financial information for the 4 prior fiscal years, the current fiscal year 2025, and 4 future fiscal years. This forecast is prepared based upon historical trends and current factors. This information is then extrapolated into estimates for subsequent years. The forecast variables can change multiple times throughout the fiscal year, and while cash flow monitoring helps to identify unexpected variances, no process is guaranteed. The intent is to provide the district's financial trend over time and a roadmap for decisions aimed at encouraging financial sustainability and stability. For fiscal year 2025, revenues are estimated to be at $86.9 million, which is $3.6 million decrease compared to the previous fiscal year. The decrease is primarily due to expiration of the 2019 renewal levy that expired at the end of calendar year 2024. The district will lose a half-year collection in fiscal year 2025, while the remaining half will be lost in fiscal year 2026, which is why revenues are expected to decrease again in fiscal year 2026. In total, 72% of the district's total revenues are made up of local taxes, of which 67.04% is from real estate and 5.13% is from public utility. State sources make up 18% of total revenues. State sources include state foundation funding. Unrestricted aid makes up about 10.41% of total revenue, and restricted aid makes up about 0.94% of total revenue. State share of local taxes, homestead and rollback credits, make up 7.02% of total revenues. Other revenues make up 10% of total revenues. Other revenues include, but are not limited to, tax in lieu of payments, otherwise known as city TIFs, where the school district is kept whole, interest income, tuition revenues, Medicaid reimbursements, and state special education catastrophic cost reimbursements. The decrease in revenue in fiscal year 2028 and 2029 is due to the expiration of the 2002 renewal levy that was last approved in 2021. If the levy is renewed, the dollars will be added back to the forecast. The earliest the district can put this levy back on the ballot for renewal is November of 2026. For fiscal year 2025, expenditures are estimated to be at $91.2 million, which is a $5.9 million or 7% increase compared to the previous fiscal year. The increase is due to the following factors: 51 new positions to the general fund, of which 35 positions came onto the general fund from ESSER funds as those funds expired at the end of last fiscal year. The remaining 16 positions are due to increases in teaching and support staff, which includes 2 additional guidance counselors, 1 for the middle school and 1 for the high school. Other increases are due to increases in wages due to negotiated agreements, increases in healthcare premiums of 3%, and increases in purchase services due to the mobile unit rentals. As you can see from the previous 5 fiscal years, fiscal year 2020 to fiscal year 2024, expenses increased on average by 4% annually. The increase in fiscal year 23 was due to a one-time transfer of $25 million to move funds to a capital improvement fund. This transfer was excluded from the percentages mentioned above. In the forecasted years, fiscal year 2025 to 2029, expenditures are forecasted to increase on average by 3.5% annually. Personnel costs make up the largest portion of the district's operating budget of 84%, which is 58.55% of salaries and 25.47% of employee benefits. Purchase services make up 9.25% of the operating budget, while the remaining 7% is made up of supplies, capital equipment, and general fund debt obligations. For the previous fiscal year, 2024, revenues totaled $90.6 million and expenditures totaled $85.3 million. This equates to revenues over expenditures of $5.3 million. At the close of fiscal year 2024, the ending cash balance within the general operating fund was $51.3 million. For the current fiscal year, 2025, revenues are estimated at $87 million and expenditures are estimated at $91.2 million. This equates to estimated revenues under estimated expenditures by a negative $4.2 million, meaning that our district will begin spending more money than it is bringing in and beginning to burn through its cash reserves. In summary, beginning with fiscal year 2025, the district will begin deficit spending by $4.2 million. Each year, the gap will continue to increase as expenditures will continue to increase at a greater rate than revenues. If the 2002 renewal levy is not approved, the cash deficit in fiscal year 2029 is estimated to be at a negative $26.3 million. If the 2002 renewal levy is approved, the cash deficit in fiscal year 2029 is estimated to be at a negative $13.6 million. By law, the district is not allowed to end in a cash deficit. The district will need to address the funding shortfall by making reductions to expenditures and/or increases to revenues. Under the district's current cash balance policy, the board believes that maintaining a cash balance reserve of 90 days of operating expenditures is necessary in the interest of sound fiscal management. For the current year, 2025, the district is estimated to end the fiscal year with 188 days cash on hand. Days cash on hand is projected to decline and is projected to be negative by 2029. The chart is based on the assumption that the 2002 levy is renewed. This concludes this episode of the Financial Fast Facts. To view previous videos, please visit the Treasury Department webpage under the SESmustangs.org website under Treasury Department Financial Fast Facts. We will look to continue to provide Financial Fast Facts in a video format and infographic format alternating months. We hope you find this information helpful. To view other financial reports, visit the Treasurer's website. And if you have questions, feel free to email me or call at 440-572-7021. Thank you.